Hello and welcome to a CMS Forex Daily Market Recap. I'm your fundamental market analyst, Nick Nassad. Today is Tuesday, May 18, 2010. A calmer tone in the European session had enabled the euro to extend its rebound from Monday's session after we had hit a 4-year low here until we reached the 1.2440 level. That turned out to be a 61.8% retracement of our most recent downswing and acted as resistance for the pair. That recovery in the Eurozone faltered and proved very fleeting as we had faltering US stocks and lingering nervousness about the Eurozone debt crisis. Following our test of our technical resistance, we began our downswing, breaking through the 1.2350 level, which was our 50-period moving average. We fell on news that Germany would support a tax on the financial market sector that would contribute to the costs of Germany's share of the 750 billion Eurozone Euro rescue package. However, going even one step further, Germany's BaFin, which is the financial services regulator, said that it will introduce a temporary ban on naked short selling and naked credit default swaps of euro area government bonds starting at midnight. The ban will apply to naked short selling in shares as well if 10 banks and insurers. The thinking here is that traders bought credit default swaps without owning the underlying asset for which the insurance was designed, which may have artificially inflated Greek funding costs during the height of the Greek crisis. However, the news is a restriction on trading, and so the market it adds uncertainty to the market. So, in response, the euro fell sharply, and it moved below the 4-year low that we had seen on Monday, setting a new fresh low at the 1.2160 area. Other euro crosses, such as the euro yen, also saw similar selling during the later New York session. We had reached a high of 115.50 prior to the New York Open, but by 4 p.m. Eastern Standard Time, we had set a low at the 112 level, a new low for this week. Risk-sensitive currency pairs like the Australian dollar, Japanese yen, which is a carry trade favorite, also after rallying overnight and bouncing up off upward sloping support trend line, broke down below that, moved below our 50-period moving average, and extended its declines on late New York trading, setting a new low for the week at the 79.50 level. So overall, a big injection of risk aversion in the New York session as a result of the news from Germany. We also had some fundamental data released from Germany, the ZEW economic sentiment for the month of May, which is a leading indicator for German activity, and it fell to 45.8 for the May period from 53.0 in April. On the downside, the decline in sentiment reflects the rising uncertainty of consumers and investors with regard to the measures aiming at consolidating the public budgets in the Eurozone, as well as further developments in the euro exchange rate. Still, the index was above its historical average of 27.4, as Germany's growth should be buttressed by increases in German exports and industrial production. In a second report from the Eurozone, we got trade balance data for the month of March, and the seasonally adjusted trade surplus shrank to 0.6 billion from February's 1.8 billion euros. Taking a look at the underlying statistics, however, we do see that we had a very big, strong surge in trade as exports rose 7.5%, but imports were up a larger 10.3%. We'll see if the decline in the euro, which only accelerated in the months for the time period for this release, should continue to see a rise in exports, and as imports become more expensive, perhaps that number will go down, so that should help to increase the trade balance surplus Eurozone area. Taking a look at the pound-dollar pair, in today's trading, we saw a rather consolidation during most of the European session, and then in late New York trading, because of the risk aversion, we did see the pound sliding against the greenback, moving to the 1.43 area. That came close to testing our low on Monday. We reached a high around the 1.4517 area in the European session, following some stronger than expected inflation data from the UK. Consumer prices for the month of April in annual terms were up 3.7% compared to the March's reading of 3.4%. On the month, inflation rose 0.6%, while the core CPI reading posted at 3.1%. All of those readings were higher than the forecast. Bank of England Governor King called the rise in inflation temporary, but higher readings could prove to be a major test for the credibility of the Bank of England if these figures persist in the following months. Would the Bank of England be more inclined to allow higher inflation instead of raising interest rates, which could dampen the economic recovery in the UK? Oil prices declined today on the sentiment of risk aversion, and we fell below the $70 a barrel level. That pressured the Canadian dollar, and as we could see in the USD CAD pair, we rose in favor of the greenback during the New York session, reaching a high of 1.0409. The Aussie US dollar pair was also pressured, bouncing down off its 50-period moving average and continuing the slide we had seen the previous two sessions, and reaching a low at 0.8623. Worries around global growth prospects as a result of the Eurozone fiscal cuts, as well as in the UK, and the attempts by China to cool its economy could have a negative impact on the commodity block of currencies going forward. Turning back to the US, we had a couple of fundamental reports. First, producer prices in the month of April were down 0.1% in monthly terms, which followed a 0.7 rise in March, while the annual rate posted a 5.5% reading, also lower than in March and lower than forecasts. The core PPI was up 0.2%, with the annual core PPI up only 1%. So the underlying producer inflation so far is very tame and does not pose a problem for the Fed, which means that it could keep interest rates longer if it deems necessary. A second report from the US showed housing starts rose to an annualized pace of 672,000, which exceeded the forecasts of economists and is the highest level since October of 2008. Permits, however, which are a leading indicator of future housing starts, fell by the most since December 2008, a sign that home building will pause after tax-induced jump in sales. Today's fundamentals were largely brushed off by the market, as right now traders are focused more on overall investor sentiment and the developments coming out of the Eurozone. Taking a look at some upcoming releases, tonight Australia posts a measure of consumer sentiment and wage prices. Overnight, Japan posts industrial production data, while the UK releases its meeting minutes. Tomorrow in the US, we get the consumer price index, as well as the FOMC meeting minutes, while Canada will post its wholesale sales. So that will do it for today's broadcast. For more news, videos, and analysis, please visit our website. I would like to thank you for watching and wish you good trading.